Hello, Math 101 students. This is Dr. Linda Curry, and this is our Week 6 overview. So again, I'll have this posted for you with a transcript. Week 6 for us is June 16th to the 22nd, starting today, the 16th. And this extends your learning of compound process in Chapter 10 and extends that to what we call an annuity in Chapter 11. So Chapter 10, you worked with lump sums or single start values or single end values. In Chapter 11, you will now explore and work with what we call annuities. Annuities have periodic payments or periodic withdrawals. For this introduction, you are only working with what's called a basic annuity, end of period deposits or withdrawals, and the compounding matches the frequency of deposit or withdrawal. The formula are more complex than those of Chapter 10, so use the tables. That's what I encourage you to use, the tables in Chapter 11. The built-in features of the Texas Instruments VA2 Plus calculator or an online calculator may also be used. Note that the answers may be a few cents different due to rounding in the tables. The problems assume that you are using the tables whenever possible, unless specifically instructed not to, as you saw in the beginning of Chapter 10 a little bit. If you do another method, I'm happy to check the work, but if it is very close to the answer provided in the book, then you most likely did it correctly. Chapter 10 and 11, you have to remember to adjust the rate and the time for the compounding. So this again is for you at the beginning of Chapter 10. And I also put it in the transcript for our in the transcript for our video here, so you can also pull it up in that way. A little table for you. Okay, so annually is once per year, and multiplication and division by 1 does not change the values. So the only exceptions to this adjusting rule really would be annually, because even if you did the adjusting, the values don't change, and daily. Daily compounding, we had special tables in Chapter 10, Section 2, so we did not need to go through the process for daily compounding. Semi-annual, quarterly, monthly, you need to be sure to adjust the rate and the time based on that compounding, and you will again have that experience in Chapter 11. So Chapter 11, only the beginning is assigned, and you're only having to do what we call an ordinary annuity. There's another process called the annuity due process, and there's also the sinking funds process where you're determining the payment. These are not required. You're welcome to read through them, but they are not assigned. The last sections of Chapter 11 are optional, and there is an extra credit assignment corresponding to Chapter 11, Section 4, Investing with Bonds. If you're unfamiliar with stocks and bonds, these sections are a good read. The authors give you a good general overview and also talk about the difference between a stock and a bond. So if you're not familiar with that, I do recommend reading it just to make yourself more familiar with these investing options and how they're structured. So annuities is Chapter 11's topic. They are an extension of what you did in Chapter 10. So you again adjust your rate and time for the frequency of compounding. But what are annuities? So annuities are investments where you're building money, like a retirement annuity where you're putting money in at every paycheck, and at the end of 20 or 30 years, maybe it has grown and you have this ending value of your 401k or something along those lines. But they can also be initial deposits that are planning for small payments out. So they can be either way. They can be deposits and they can be payouts. But either way, there's going to be this payment, whether it's a deposit or a withdrawal. There's going to be this payment value. So you take that payment value times the table value. Again, the formula is a little more complex. You can see here on page 408, it relates back to chapter 10 and shows you the relationship. But you're not going to do a computation piecemeal like this. So we have tables just like we did in chapter 10, and I do recommend that you use these tables. They again take care of the exponential portion of the equation, and you will just take this table value and multiply it by the payment value. Chapter 11, section 1 is going forward in time. This table is called amount of annuity table, going forward in time. And then chapter 11, section 2 is going backwards in time. So chapter 11, section 1, chapter 11, section 2 is analogous to chapter 10, section 1 and chapter 10, section 3, forward in time and then backwards in time to get a present value. In each computation, use the tables provided, multiply by that recurring periodic payment or deposit. I do have a link for you in the transcript if you're interested in taking a look at an online calculator, the time value of moneycalcs.com, and I have it linked directly to the future value of annuity link. So you can see the formula and read that there if you're interested. Little logic and a little image. This is also posted for you in your Google Share folder as its own document, but I inserted it here to the transcript and to go over it with our overview. Page 423, number 13, so that's chapter 11, section 2. Page 423, number 13. So this is a savings planning and a payout planning. So it says Gabriel estimates that his daughter's college needs beginning in 8 years. So still 8 years before this is starting, will be $3,600 at the end of each quarter for 4 years. Part A, find the total amount needed in 8 years, assuming 8% compounded quarterly. And notice that everything is compounded quarterly in here. Those are the only types of annuities that you're required. It's just a quick introduction to annuities, so everything matches up, and it's, even though the formula is more complex, this is the simplest version of that formula. So the payouts are going to be planned to start in 8 years, but they will go for 4 years every quarter. So you want to keep that in mind when you're looking at that payouts. You need to have a certain amount in the account at the beginning of the college years to have those structured payouts go for the next 4 years. Well, that's part B. Part B is the savings. Will he have enough in the 8 years, right? He has 8 years to save. If he's investing $700 at the end of each quarter for those next 8 years. And again, 8% compounded quarterly, everything is compounded quarterly. Those are the types of problems that we're doing. So part A is going backwards in time. That's Chapter 11, Section 2. We're trying to find the present value of the payouts. Present value of the payouts. We're going to bring them back to their starting point. Part B, we're going to look at the savings that he's proposed and take that savings plan through the 8 years. Now we're at the same point in time, and we're going to compare those two numbers, right? So the payouts expected was Part A. We take that, and it's a present value computation. What's needed at the start. The savings plan is going to go for 8 years. We're going to take it to its future value at the end of those 8 years and see if there's enough. If our savings plan comes to a future value that's less than the present value we got from Part A, then we didn't save up enough. We need to revise our savings plan. That's what you're doing with this application. I think this is a really good application. It gives you an idea of how you could go about thinking through savings plans and planning for future expenses. So I think it's really great application. There's a lot in Chapter 11 about retirement plans and planning. So it's really going to give you a good idea of the types of computations that are going on. This is just, 101 level math, so it's giving you an introduction to them. Please talk with a financial specialist wherever you have any investments. If your company has a 401k, you can talk to your human resources about who can give you advice on how to manage that money better. Don't be afraid of it. Definitely jump in and try to understand enough of it to be sure that you're guiding and working towards the future that you want. So again, if the savings plan is not sufficient, then they're going to need to do something different. That's what you're asked in Part B. Will that savings plan be enough? So be sure to make that comparison, right? Once you find those two numbers, make that comparison and think about it critically. After that little bit of annuities in Chapter 11, this week you're also looking at Chapter 6. It might seem a little illogical to kind of go back to Chapter 6, but there's a method to this. In Chapter 6, payroll deductions is covered. And we pair this with the individual income tax computations in Chapter 13, which is what you will do next week. So Chapter 6 involves some basic arithmetic and computing gross pay, and then using that gross pay to come up with the payroll deductions, the taxes that are withheld from it. So you're just thinking back to Chapter 3. Part equals the rate times the base. The rate, well, whatever the tax percent is. The base, whatever's being taxed, whatever that gross pay amount is, or as you'll see with federal withholding, you're allowed to do some deductions and then use a reduced number to compute the taxes. So part equals rate times base, just like you were practicing in Chapter 3. That's it. That's all that you need for that part for most of Chapter 6. Federal taxes are on a sliding scale. It is a tiered system. So the more you earn, the higher the tax rate on that additional income. Right? So much of your money might be taxed at 10%, the next so much at 12, and then 15. It's a sliding scale. So as you go up more, that additional earning is taxed at a higher percentage. So my recommendation here is to really pay attention to page 232, example 3. Page 232. So page 232, example 3. Married and claiming 2 withholding allowances. Weekly gross earnings of $690 in the week. Use the percentage method to find the withholding tax. This is nicely color-coded for those of you that are visual learners. It's walking you through it step by step. Notice that these little words in here, like 15% of the excess over, those are also the headers in the table. So when you're doing these, pay attention to those headers in the tables. That's my tip for you. The headers in the tables describe the computation process. Once you identify the correct portion of the table to read, right, that's based on how the person files, then you will read the headings and organize the computation as shown right here. So you have an initial amount that takes care of any tiers that came before the last tier, and then the additional income is taxed at the higher percentage. That's what this little red part is doing. That additional income is taxed at the next level up. So the number up in front takes care of previous tiers, and then this last part takes care of any additional income that's being taxed at the higher tier. Notice that there's some information here right below example 3 for how to plug it into your calculator. If you're using the Windows calculator, instead of STO for store, it's going to be the MS key in the top row for memory store. And when you want to recall the memory, RCL here, then it's going to be the MR or recall. So on the Windows calculator, 690 minus 2 times 77. 9. Now that I have this number in display, memory store, MS, see the little M there? It tells you have something in memory. Now I can just follow right below it, 35.7, which is from reading the tax table, plus 15% written in decimal form, 0.15 times, set up your parenthesis. The amount that is taxed at 15% is the amount over that $534.2 minus 521. So that amount over that 521. So I'm doing that subtraction there. So memory recall. See how I put that number back in? Minus 521. Close my parenthesis. Remember, when you close your parenthesis, the value on your screen is just the value of that subtraction in parentheses. I still have to hit equals for it to do the entire arithmetic to get my final answer. So keep in mind when you're working in these taxes that these are all from the tax year 2016. This was the most recent tax year that had just been published and made available right as this book was going to press. Note that these withholding allowances, these amounts, these tax rates, they're all set by legislator. They're all subject to change. And the values used in here are from 2016. You can always go to the irs.gov website to look up any current information. Just a quick note, because sometimes after working with other taxes, people jump into the payroll taxes and end up adding instead of subtracting. So I just wanted to point out real quick, be careful with this. When you are doing sales tax, it's added to the cost of the item. But now we're talking payroll tax. Payroll tax is deducted from the gross pay. Now, in a lot of these examples, they will add up all of the deductions and then do one subtraction. Do it whichever way you want, whether you subtract each one individually or add them all up and do one big subtraction. Either way, the idea is payroll taxes are deducted from the gross pay. Net pay is what you receive. That's that take-home pay. Net pay is what you receive after all payroll deductions have been made. Payroll deductions could be taxes. They could be union fees. If you had an advance prior to the payroll, then you could be repaying in advance. Charitable deductions, retirement, and any other deductions that you may have set up, like a direct pay to your savings account, and then the rest goes to checking, something along those lines. So example 7 on page 234 is a nice example. It includes all of the taxes and some other deductions. So that's a really good one to practice. Read through the examples, and then when you want to really challenge yourself and make sure you're ready, that you know what you're doing, example 7 is your one to work on and make sure that you got it. And so if you're not able to get the numbers, please use a discussion or talk to a tutor for support with the computations. So again, example 7. So example 7 is right here. It's not showing you a lot of the steps. So that's why I'm saying review the other discussion, review the other examples, and then when you're ready to challenge yourself and make sure you know what you're doing, example 7, if you're not getting these values, then you need to do a little more practice. So that's a good one to challenge yourself with. So the very end of chapter 6, section 4 does a little bit more with what gets submitted to the IRS and help you understand this process from the employer perspective. Employers must match the Social Security, FICA, FICA, Social Security, and Medicare. So knowing what all employers have to pay in payroll costs and benefits is important. If you're in negotiations or reviewing a job offer, you need to understand the total cost to the business to employ you. And you need to understand what is and is not included. So employers file these payments and forms online, and they also may be required to make payments for unemployment taxes. So it's important to understand, if you are being paid $50,000, that means your take home or net pay will be less than this. But the overall cost to employ you will be more than this. So if you're making a career change or otherwise looking for a job in the near future, please check with Pierce College's Center for Career and Professional Development. For your convenience, I also put the link right here in our transcript. So 215-670-9202 is the direct dial, or careercenter@pierce.edu for emailing them. They'll go over your resumes with you and help with job prep, but I like to always emphasize this little piece about what it looks like from the employer perspective, that total compensation. It costs them more than what you're taking home, so just keep that in mind when you're doing any negotiations. All right, so what else is in week 6? Again, week 6, June 16th to the 22nd. The main thing to emphasize is that quiz 2 second attempt should be completed this week. So you want to click into your MyLab system and click on the MyMathLab gradebook and click into the review link. You want to be sure that you come here where it says come here to review a quiz and click on the little review link that's near your quiz grade. This was one that I had clicked through. This is nobody's, it's just one I clicked through. And when you click review, there are several options here. It's a really nice walkthrough. You can click on the overview. You can see which ones are incorrect or partially correct. If there's a little red triangle here, that means that you got it incorrect, but it always shows the correct answer here. So click on it to see what you entered. And so here I entered 63 instead of 68. What did I do? I forgot to add the 5, right? If you're not sure, you can click here, get answer feedback, and a general one will come up. You can go under question help. Help me solve this as a step-by-step tutorial. Ask my instructor, view an example. There's a couple things here. Plus, some people I've reviewed already and typed in some comments. If you're reviewing your quiz 1, also I have some comments that I typed in there. So there's a couple ways to view information when you're clicking through these. And so maybe I was completely lost on number 12, then what would I do? I would come in here, help me solve this. It's a step-by-step tutorial. So if you're needing extra help, send me that message, right? Ask my instructor, type a note so I know what to focus on with my response. Schedule an appointment with a Walker Center tutor, schedule an appointment with me, post a note in the discussions. There's a lot of avenues for support here. What else is being done here in week 6 besides finishing up with quiz 2? You have your regular participation. The discussions, finish up with the week 5 discussion. Make sure you have 2 fully correct and explained problems. Interaction is graded, so make sure that you're interacting, right? Make sure that you're discussing the problems, the solutions, encouraging each other, study tips, sharing videos. There's lots of options for interaction points. The week 6 discussion will again have 2 weeks. So, you have plenty of time for that, but being active several days a week makes it a better learning tool for you and a better study tool later if you're printing it when you're working your final exam. This week, you can also work on the extra credit. I have to click back into it. There's an extra credit here at the end of chapter 11 on the bonds at the end of chapter 11. There's an extra credit there. It's just a few problems. It can be done this week or next week, but keep in mind if you do it this week and get it to me this week, then I can give you some feedback and you still have time to make some revisions if needed. But it's accepted all the way up until the last day of the class, so you have flexibility with that. All right, so quick look ahead. Week 7 covers the IRS Form 1040 computations. So that's chapter 13, just section 2. We're not doing a lot from that chapter. We're tying that in with the payroll deductions from chapter 6. So chapter 6 is what happens at each payroll. And then chapter 13, section 2 is what happens in April each year when we file taxes. Of course, this year with the pandemic, it's July 15th instead of April 15th. But that's how those 2 sections are related, which is why we didn't do chapter 6 earlier, why we're doing it now and coupling it with the chapter 13 computations. And the last topic for the class is a brief introduction to statistics, which is chapter 16. And that is also done during week 7. So again, those are both very brief. So it's not a lot of heavy learning. It's not like a chapter 10 being thrown at you, which might be a new concept. It's usually something people are more familiar with. And once you learn that percentage method in chapter 6, the table in chapter 13, section 2 is so similar that it's going to be easier to grasp that quickly. So there is both a final exam and a practice final exam. So you can come in and click into the practice final exam anytime. This is an optional discussion and you can download the practice final exam and work on it at any time. The actual final exam will not be available until week 7. Tuesday, June 30th is the last day of session 5, so it will be the last day to submit the final exam. And it will be a Word document that you download and complete during week 7, and then you will submit your answers in the exam item in our course. I will go over that a little bit more in next week's overview. So that was your overview for week 6. I look forward to working with you and interacting with you in the discussions. Feel free to email me as well.